back. You're watching Business Week on Arise News. Now, joining me to review some of this week's business stories is Arise business analyst, Mr. Bode Ososami. Great to have you on the show again, Bode. The story making global headlines is the collapse of Silicon Valley Bank. I mean, this is a pretty major situation, but do you anticipate it to have a broader impact on the financial system globally?
Well, thank you, Rolake, for having me on the show. Remember, also earlier in the week, crypto lender Silvergate Capital had major financial issues, sending their shares plunging as well. So there is a pattern forming here, though it's still too early to say this is systemic. We are in a time of higher rates and the end of an era of easing money, which encouraged weaker risk management, weaker assets and liabilities management. All these are now coming to haunt players. In my view, growth sectors and startups and their financiers are, of course, more vulnerable. So no surprise when SVB, the 16th biggest in the U.S., assets of about $209 billion emerged as the largest bank to fall since the 2008 financial crisis. The fallout is getting huge. Just now, I just noticed U.S. cryptocurrency firm Circle said in a tweet late yesterday that as much as $3.3 billion of their $40 billion of USD coin reserves are stranded at the collapsed lender. So I think it's huge. What happened, of course, we know nobody wants bonds yielding 1.5% when 6-month treasury bills are giving you 5%. So SVB was stuck with these bonds. They had to quickly sell as a lot of their depositors burnt cash and they weren't getting these deposits anymore. And this also came at the time when the Federal Deposit Insurance said U.S. lenders were sitting on roughly $620 billion of combined unrealized losses in their securities portfolio. So as they sold this $21 billion in securities in this jumble sale, and they lost $1.8 billion. Markets, of course, started panicking. They tried to raise capital in a hasty transaction that failed. The rest is history. But let me just add, Goldman Sachs said that they think that SVB issues are idiosyncratic, that is peculiar to SVB and not really systemic. And I think after a while, we saw some of the other banks like JP Morgan closing up 2.54, so there was a bit of flight to quality as people got used to the fact that this may not be something that is affecting everybody.
Yeah, it may not be something that is affecting everybody, but the main target market for SVB were the venture space, a lot of tech startups. And one of the things that really impacted them was borrowing rates on loans. And of course, because they had also invested in other types of securities like mortgage-backed securities, and there were quite a huge amount of defaults. In my head, I'm thinking this has sort of memories and rumblings of what we saw back in 2008. Is the global tightening and the move to increase rates having a much broader impact on the business ecosystem beyond what we could imagine?
Well, many analysts have said that we can expect some ripples as a result of this tightening, and then some have said that the Fed was tightening too much. But my sense is what you're saying for many of these crypto-focused or startups, tech startups, is more of weak risk management, in my view, because many of these startups, of course, you know what happened last year when there was a lot of money and it was pushed at many of these companies. Many of them didn't do the due diligence, and of course they were caught by surprise. Everybody knew that the rates could never remain that low forever. All you need is a spreadsheet to just work out when it would increase and how you would react and how that would affect your portfolio. So this is not nuclear science. So they should have been doing it. But of course, you know, when you're making so much money, you take your eyes off the ball, and I think that's just what this is. And there'll be one or two more that would be in this position, but some that were a bit more careful will not fall into the similar space. But having said that, regulators are looking closely to ensure that loopholes were properly addressed. And I think we could see much more regulation, especially looking at crypto-focused ventures and exposures.
Yeah, and it's worth bearing in mind that deposits of up to $250,000 are, of course, covered under deposit insurance in SVB. Now to Nigeria. Last week, the governorship elections, which are landmark elections, actually were postponed. Did that have any impact on how investors were viewing Nigeria in terms of the risk premium? You know, what signal did that send to markets?
Well, I looked at the NG Global X MSCI, that's the Nigerian ETF on the New York Stock Exchange, which focuses on Nigerian companies, and it was down 4.7% last week, and just on Friday it was down 1.51%. So investors are not happy. But postponement obviously heightens uncertainty and in what is now seen as a very delicate democratic transition. And Nigeria has gone through a lot recently. A rescheduled election is the last thing an already volatile polity and stressed economy needs. So others argue that it produces a fairer outcome, the price is worth it. INEC budgeted 355 billion naira for the elections. Any delay will certainly take that amount over the budget, not to talk of costs arising from the suspension of economic activities and movement restrictions. And the study has put that extra cost as much as 1 to 2% of the GDP, which comes conservatively at over $1 billion and potentially over $2 billion. So other effects would be harming voter enthusiasm and turnover rate, an advantage to better funded parties, because of course the leaner wallets will find they don't have any money to mobilize voters and extend their campaign. So there are issues here, but they say if it delivers a better outcome, why not? It will be interesting to observe how a more accurate governor election with results efficiently uploaded and transmitted, hopefully, differs, especially in total turnout and patterns of voting from the election we had, the presidential election.
We shouldn't forget that in the mix of all this is a Supreme Court ruling on the naira redesign. That is also adding to the mix, because that's creating, obviously, socioeconomic challenges across board. What is your take on that? It appears just to be a policy yo-yo, doesn't it?
Well, I'm an institution person, and it's unusual for the Supreme Court to be intervening in what I think is monetary policy. That's not a good precedent. Will we get Supreme Court legislating on interest rate decisions too someday? But it also stokes more uncertainty and conveys a signal denoting lack of confidence in our monetary institutions, albeit the good intentions. Having said that, the central bank admitted that the execution of the policy was far from seamless, and they now reversed the decision to demonetize these high-value currency bills due to execution issues, actually stalled the nation's estimated $220 billion informal economy. Manufacturers said that their sales dropped by as much as 25% in sales in the period. Nigerian bureaus reported that it saw the worst February in sales because a major part of its business is done in cash. But if the CBN does succeed in the long-term objective to attain better monetary control, sterilize illicit funds, that will reduce inflation, which is good for markets, although analysts also say the drop in supply due to less cash could have an impact as cash returns and demand is not met by goods. So you get that gap there, demand pool stoking up inflation in the medium term. But I think we need to focus on improving the capacity of our institutions to do better and instead of stoning the CBN.
Yeah, well, clearly quite a lot of Nigerians across all socioeconomic classes feeling the pinch there. So I want to talk about what's happening in the U.S. Lots of news coming out of the market. Powell's testimony, chairman of the Fed, U.S. policy on monetary tightening, Biden's budget, non-farm payrolls. What policy direction can we expect from the U.S. government?
Well, I think everybody is worried about fiscal pinch. That's the common thing here. The money just isn't there anymore. And although markets dipped as Fed Chair Jerome Powell told lawmakers that it would likely need to raise rates. And data is becoming much, much more important than it used to be. And we really haven't gone this way before. So I really feel sympathetic with the central banks all over the world trying to meander through this, if you like, this maze of issues. But Powell, I think, gave the clearest indication that things are likely to be more hawkish in the future. Rates are likely to stay higher. Some of the things he said included things like it's going to be bumpy, restrictive monetary policy. It will take time to impact monetary policy, to impact the inflation and the economy. There is a lag. Restoring price stability is critical. We will stay on course until the job is done. All that is telling me that they are doing their best, but they're really working on a meeting-by-meeting basis.
Yeah, interesting there. Thank you so much for being with us. We've actually run out of time. And of course, U.S. inflation data comes out next week. So we'll see where Powell heads on that. Thank you so much, Bode Ososami. Great to always have you on the show.